Hi friends, welcome back to Let's Talk Audit and Assurance, and you are still in the MCQ Marathon playlist. Now, if you have been following this marathon with us, then this should be your part 3, where together we will crack the audit code with questions for board exam preparations. 25 questions, one goal, CPA success. Let's go. Let's start with our first question. Which of the following procedures should an auditor generally perform regarding subsequent events? And to this, we call to mind once again that subsequent events are events that occur after the balance sheet date but before the date of the auditor's report. Letter A would say compare the latest available interim FS with the current or with the FS being audited. So that being said, this will be to compare the latest available interim FS of the year or interim or subsequent to the year under audit. Letter B would say communicate material weaknesses in internal control structure to the client's audit committee. Letter C would say send second requests to the client's customers who failed to respond to initial accounts receivable confirmation requests, whereas letter D would say review the cutoff bank statements for several months after the year end. Now, actually, choices Bravo, Charlie, and Delta are all done within the testing phase and when the auditor performs tests relating to accounts, transactions, and balances. So, of the four choices we have here, the one that is generally done when testing subsequent events is letter A. The key to remember here is that the interim FS that we are looking at or that we are comparing with the FS under audit, the interim period here actually refers to the period after the balance sheet date. And the FS being audited would of course be covered within the period under the balance sheet date. Okay, so our next question is which of the following headings will always appear at the same time in an auditor's report? Now, we know PSA 700 has provided us with all of the details and all of the guidelines that we must remember when preparing an audit report. Now, which of these two will always appear at the same time? So, letter A would talk about opinion and key audit matters. However, in this case, we do recognize that key audit matters are only present if the entity that you are auditing is a listed entity. That being said, if it is not listed, then the opinion and the key audit matters section will not appear at the same time. So therefore, because the question is will always appear at the same time, the answer can't be letter A. And since it can't be letter A, that means effectively it also cannot be letter D, right? Because we have already ruled out letter A. So we're also striking out letter D delta. So we're left with two choices. Will it be the heading report on the financial statements and report on other legal and regulatory requirements? Or will it be the headings unqualified opinion and material uncertainty relating to going concern? Now let's evaluate letter C, and to this we would recall that actually material uncertainty related to going concern will only appear if the entity has substantial doubt regards its going concern. And so therefore, if the entity does not have substantial doubt, then or significant doubt regards its going concern, then the MURGC paragraph will not appear in the report. And again, because the question is always appear at the same time, the answer is also not letter C. That means to say the answer to this question is Bravo. Now, we recall that when the auditor has other legal and regulatory requirements in order to draw out the proper distinction in the audit report between the report of the auditor on the FS and the report of the auditor on the other legal and regulatory requirements, these two headings must appear. Meaning to say, the presence of the heading report on other legal and regulatory requirements will necessitate the presence of report on the financial statements heading right before the opinion. Take note that these are just headings because we know the opinion section is still the first major section in the audit report. But should the auditor not have any other legal and regulatory requirement, then the heading report on other legal and regulatory requirement will not appear, as well as the heading report on financial statements will also not appear. Okay, but the moment there is an other legal and regulatory requirement, then both headings must be present. So they are together always. They will appear at the same time always. Let's move on to the next question. An auditor is confronted with an exception sufficiently material to warrant departing from the standard wording of an unqualified report. Now, if the exception relates to a violation of the PFRS, or the Philippine Financial Reporting Standard, the auditor must decide between, and to this we recall the reasons for the modification of an auditor's opinion. And we pointed out that the auditor may modify his or her opinion in the case of, for example, number one, misstatements, and these misstatements would include violations to the standards, and number two, in the case of scope limitation. So what is being invoked in this question is the reason of a violation of the standard. And whenever the reason relates to a misstatement or a violation of the standard, then the modifications from which the auditor may choose from will be between a qualified opinion, if it is material but not pervasive, or an adverse opinion in case where it is both material and pervasive. So the answer to this one shall be letter B, between adverse opinion and a qualified opinion. So that's bravo for this number. Moving forward to the next question, an auditor plans to examine a sample of 20 purchase orders for proper approvals as prescribed by the client's control procedures. One of the purchase orders in a chosen sample of 20 cannot be found, and the auditor is unable to use alternative procedures to test whether that purchase order was properly approved. Now, this particular statement is important because we say that sometimes when the auditor encounters some issues or some concerns or some problems with regards to testing, the auditor will always endeavor to perform alternative procedures. And the performance of these alternative procedures will somehow erase the previous issue, concern, or limitation. So in this case, one of the POs cannot be found and the auditor was not able to perform alternative procedures. So what should the auditor do? Letter A says, treat the missing purchase order as a deviation for purposes of evaluating the sample. Or letter B, choose another purchase order to replace the missing purchase order in the sample. Or we can have letter C, consider this test of control invalid and proceed with substantive tests since internal controls cannot be relied upon. Or shall we go for letter D and just select a completely new set of 20 purchase orders? Now, in this case, because the auditor was not able to perform alternative procedures, then the auditor will treat this one as a deviation for purposes of evaluating the sample. So again, the rule simply with that, if there is a missing item in your sample, endeavor to perform alternative procedures first. Otherwise, if no alternative procedures may be done, then treat as a deviation. So the answer to this is alpha. Moving forward to the next question, which again must be one of our most favorite questions in auditing theory. Who has the primary responsibility for an organization's financial statements? And together, let us say management. So the answer to this one is alpha. Next, what is the subject matter of auditing, or the subject matter of auditing consists of? Does it consist of assertions, evidence, written reports, established criteria? Of course, the answer to this one is it actually consists of assertions. Now, sometimes some examiners, they do put a letter E here, financial statements, and we would normally be attracted to the answer financial statements. But let us not forget that subject matter actually refers to the substance. The subject matter information refers to the document or the report that contains a measurement of the subject matter. So when financial statements are placed here, it still wouldn't be the answer because the question is about the subject matter. So the subject matter of auditing would of course be our assertions, and to this we recall we have two major categories of assertions. That will be assertions relating to balances, and for this we will have the assertions of completeness, classification, presentation and disclosure, of course, accuracy, valuation and allocation, the assertion of rights and obligations, and finally the assertion of existence. And then we also have our assertions related to transactions and events, and of course the related disclosures, to which we will have the following assertions. We still have completeness, we still have classification, but then we have an additional C, and that is of course cutoff. Letter P would still be for presentation and disclosure. Letter A would still be for accuracy. And then we have letter O for occurrence. So those are the assertions in the financial statements. Okay, let's move on to the next question. A CPA has received an attorney's letter in which no significant disagreements with the client's assessment of contingent liabilities were noted. However, this particular attorney resigned, so the resignation of the client's lawyer shortly after you have received the letter should alert you that letter A, an adverse opinion will be necessary because the lawyer resigned, or should it alert you that letter B, the auditor must begin a completely new set of examination for contingent liabilities? Or letter C, maybe we should be alerted to the possibility that undisclosed, unasserted claims may have arisen. Or should we be alerted to the possibility that the attorney was unable to form a conclusion with respect to the significance of the litigation, and that's why the attorney resigned, which for me doesn't seem likely. So in this case, the correct answer should be letter C, right? So when this lawyer has resigned immediately after you have received or shortly after you have received the response, we should be alert to the possibility that maybe there were undisclosed, unasserted claims. All right, so the answer to this is Charlie. Of course, we cannot give an adverse opinion, right? Adverse opinion is when the financial statements are not fairly presented, and it's unfair for us to conclude that if this lawyer simply resigned. So the answer is Charlie. Let's move on to the next question. Which of the following audit procedures most likely would assist an auditor in identifying conditions and events that may indicate substantial doubt on an entity's ability to continue as a going concern? So again, we are being asked about the procedures we would most likely do. Letter A, confirming with third parties the details of arrangements to maintain financial support. So just for example, if you're familiar with the concept of bailouts, right? So if there is, or if your client is being maintained or is maintaining financial support, don't you agree that that might be a red flag, or that might already be an indication that the client is actually undergoing going concern issues? I would say, yeah, that is most likely it. But then let's evaluate the other choices. Letter B, inspecting title documents to verify whether any assets are pledged as collateral. And to this, we actually remember that pledging assets as collateral does not necessarily mean that the business is going down the drain. Sometimes businesses do this when they want to have, or when they wish to get additional funding, such as, for example, in the case of expansion. Letter C, reconciling the cash balance per books with the cut-off bank statement and the bank reconciliation, which is a normal procedure. Or letter D, comparing the entity's depreciation and asset capitalization policies to other entities in the industry. And again, this does not necessarily show a problem regards going concern. So therefore, the best answer to this one will be letter A. When your client is maintaining financial support from other entities, like maybe the subsidiaries or maybe their home office, then that might, or head office, then that might mean that they're in a rough patch. Okay, so the answer to this is alpha. Next, the primary purpose of an independent audit of financial statements is to, letter A, assure management that the financial statements are unbiased from material and free from material misstatements. Letter B, comply with laws and regulations. Letter C, provide users with an unbiased opinion about the fairness of information presented in the financial statements. Or letter D, provide a basis for assessing management's performance. So of course, we're talking about external FS audit here. The primary purpose is to provide users with an unbiased opinion. So the answer is letter C. An underlying feature of random sampling is that which of these four statements do we associate better with random sampling? Letter A, each item in the accounting population is randomly ordered. So is random sampling referring to the way that the population is ordered? Or letter B, the item must be selected systematically. But then we also get to recall that there is a thing which we call systematic sampling or systematic selection. Letter C, the stratum of the accounting population is given equal representation in the sample, or letter D, each item in the accounting population has an opportunity to be selected. And I think we're all able to recognize that one characteristic of random sampling is that each item in the population has a chance to be selected. So the answer to this should be delta. Moving on to the next question. In planning for an audit, materiality is a very important consideration in determining number one, audit objective, and of course, that's a yes. Number two, evaluating audit risks, that's also a big yes. And number three, establishing the scope of your audit, yes, yes, yes. So the answer to this should be a quick letter A. Next question. What do we call the possibility that the auditor's conclusion based on a sample may be different from the conclusion reached if the entire population were subjected to the same procedure? Meaning to say, what do we call the possibility that the sample does not look like the population? And because the sample does not look like the population, then our decision based on the sample is now different had we tested the entire population. That is what we call sampling risk. The problem is in the sample, and the problem is that the sample does not look like the population, and because of that, our conclusion, which will be based on the sample, is now different than from had we tested the entire population. So this is letter C, sampling risk. Next question. Which of the following circumstances will necessitate the use of an emphasis of matter paragraph? And this is where we recall that emphasis of matter paragraphs are used when the auditor wishes to highlight something that is found in the notes or that is disclosed in the notes. So let's evaluate our choices. Letter A says, your audit report and the audited financial statements are included in the annual report to shareholders. That means our audit report and the audited FS are included in other information, right? Upon reading the annual report, you found inconsistencies and incorrect information in the annual report, which management refuses to correct. Now, this is a beautiful choice that we are evaluating because it allows us to review the concept of, or allows us to review a responsibility when our audit report is included in other information, and we know that we should read the other information, and we are reading the other information because we are on the alert and on the lookout for possible inconsistencies. Now in this case, what we are seeing here is a material inconsistency, and once we're able to spot a material inconsistency, we then investigate which between the audited FS and the other information, in this case the annual report, contains the misstatement. Now, in the case of letter A, it so happened that upon your investigation, you found out that the incorrect information is found in the annual report. Now, because it is found in the annual report, and if management refuses to correct, the auditor actually has the option of, number one, withholding the report until management corrects it, or number two, adding an other matter paragraph. So in the case of letter A, actually, this will not be an emphasis of matter paragraph. Rather, this would most likely be an other matter paragraph. Take note that in the case of letter A, we cannot modify our opinion because the FS is correct. It is the other information, or in this case, the annual report, that needs the revision. And we are not auditing the other information. Therefore, we cannot modify our opinion. The most that we can do is to include an other matter paragraph in our audit report to highlight the inconsistency. All right, so it's not letter A. Letter B, you are your client's first external auditor and is reporting under a comparative framework. However, the prior year's financial statements are unaudited. And when the auditor wishes to highlight the fact that the prior period is unaudited, the auditor actually makes use of an other matter paragraph because this particular fact is not expected to be disclosed in the notes. This one is not related to the FS per se, it's related to the audit. So therefore, use an other matter paragraph. Letter C, you are auditing financial statements that were prepared on the tax basis of accounting. Now, the basis for preparation and the framework being used is generally disclosed in the notes to financial statements. Therefore, if you want to highlight the fact that this is not the FRS but rather the tax basis of accounting, then you will use an emphasis of matter paragraph because this is something we expect to be disclosed in the notes. So you just make a reference to the note. Okay? But still, let's evaluate letter D. You are reporting on comparative financial statements whose prior year was audited by another auditor who does not wish to reissue the prior year's report. Again, we use an other matter paragraph for this one. All right, let's move on to the next question. PSA 700 redrafted promotes consistency in the auditor's report. That is why we have kind of like an illustrative auditor's report, right? Which of the following is the best reason for the focus on consistency? Is it letter A? It reduces the audit effort required to complete an engagement, basically because you already have some sort of like a template for your audit report. Letter B, it helps to promote the user's understanding and to identify usual circumstances when they occur. Or letter C, it promotes credibility in the global marketplace by making more readily identifiable those audits that have been conducted in accordance with globally recognized standards. Or is it letter D, all of these reasons, or all of these are reasons why PSA 700 focuses on consistency? Well, actually, we might be, naturally attracted to the choice that says all of these reasons, but the answer to this is letter C. Because while we are promoting consistency, this particular uniformity in wording in our audit report does not actually have an effect on our audit effort because our audit effort is mainly dictated by our acceptable audit risk and our risk assessment. Letter B also says it helps to promote the user's understanding and to identify usual circumstances, while the presence of uniformity should help them identify unusual circumstances. So the correct answer to this one is letter C. Moving on to the next question about segregation of duties. Proper segregation of duties requires, and to this remember that we segregate the duties of care. C for custody, A for authorization, R for record keeping, and of course letter E for execution. So a proper segregation of duties requires, and here are our choices. Letter A, an individual maintaining custody of an asset be entitled to access the accounting records for the asset. But as we have mentioned, custody and record keeping should be separated, right? Letter B, an individual recording a transaction not compare the accounting record of the asset with the asset itself. Or letter C, an individual authorizing a transaction records it, thereby violating the tenet of separating or segregating custody or authorization and record keeping. Or letter D, an individual authorizing a transaction maintain a custody of that asset. And like what we have pointed out, this is a no-no in terms of segregation of duties. So the only one which we find acceptable here is letter B. An individual recording the transaction should not compare the accounting record of the asset with the asset itself. Okay, so that's bravo for segregation of duties. Next, according to audit risk and materiality in conducting an audit, the concepts of audit risk and materiality are interrelated and must be considered together by the auditor. Which of the following is true? So we're going to evaluate the statements and find which one is correct. Letter A, audit risk is the risk that the auditor may unknowingly express a modified opinion when in fact the financial statements are fairly stated. Letter B, material fraud but not material errors cause financial statements to be materially misstated. Letter C, if misstatements are not important individually but are important in the aggregate or in total, the concept of materiality does not apply. Or letter D, the phrase in the auditor's standard report that reads, present fairly in all material respects in conformity with generally accepted accounting principles, indicates the auditor's belief that the financial statements taken as a whole are not materially misstated. And I think when we read that, we have recognized that we have a winner. And the answer, of course, is letter D. We do recall that audit risk is the risk that the auditor may unknowingly express an unmodified opinion when in fact the financial statements are materially misstated. And we know in the case of letter B that the causes of misstatements are either fraud, error, and even non-compliance. And when we talk about misstatements, they must be considered both individually and in the aggregate. Materiality, the consideration of materiality would still apply, whether individually or in the aggregate. So the answer to this one is delta. Moving on to the next question, which of the following sampling methods would be most appropriate in performing test of controls over authorization over cash disbursements? Of course, we know this one to be attributes, because attributes is to test for characteristics. So if what you would like to look at is whether the cash disbursements are authorized, so that's the characteristic under test, so you will use attributes sampling. We now have here two statements which we are going to evaluate and determine whether they are true or false. Let's start with statement 1. When forming an opinion and reporting on special purpose financial statements, the auditor shall apply the requirements in PSA 700, and this is true. Whether the client uses a general purpose framework or a special purpose framework, the requirements of the PSA and the standards set forth by the PSA would still need to be followed. Statement 2. In the case of financial statements prepared in accordance with the provisions of a contract, which is another form of a special purpose FS, the auditor shall evaluate whether the FS adequately describe any significant interpretations of the contract on which the FS are based. And of course, this is true. Okay, so we kind of like replace our PFRS or general purpose framework with the provisions of a contract, the requirements of the contract, and this is will yield to what we call a special purpose FS. So this will be true and true. Next question. An auditor generally obtains from a client a formal written statement concerning the accuracy of inventory. This particular letter of representation is used by the auditor too. So this is now an example of what we call a specific written representation, because this one is specifically about the accuracy of inventory. Now we remember that written representations may be used or may be part of our audit evidence, but they should not be taken at face value, and they are not considered as a substitute from the actual performance of audit procedures. Therefore, this particular letter of representation is used by the auditor to, and let's look at the choices. Letter A, lessen the auditor's responsibility for the fair presentation of balance sheet inventories. But then we stop, look, and listen, because letter A, it is not the auditor's responsibility. The fair presentation of the balance sheet inventories are not the responsibility, or is not the responsibility of the auditor. So definitely not letter A. Will this letter of representation be used by the auditor to confirm in writing the valuation basis used by the client to value the inventory at lower of cost or market, or maybe even lower of cost or NRV? Or will it be used by the auditor to reduce the scope of the auditor's physical inventory work but not the other inventory audit work that is normally performed? Or will it be used by the auditor to remind management that the primary responsibility for the overall fairness of the FS rests with management and not with the auditor? And of course, with this, we know that this is the correct answer. All right, so again, when we talk about these specific written representations, they do not have an impact on our scope, and they do not have an impact on the effort that we will be exerting. We only utilize this one as means of corroboration. Again, please be reminded that the evaluation of inventory is at lower cost or net realizable value. Next, what is the primary objective of using stratification as a sampling method in auditing? Now, when we talk about stratification, this is where we group items of a similar characteristic. When applied to test of balances, this is where we'll normally group items or accounts or balances according or accounts based on their balances. So say for example, we would say all customers with AR balances of 1 million and above will belong to one stratum. Then those with below 1 million but more than 100,000 will be another stratum, and those below 100,000 will be a third stratum. So that is stratification. So what is the primary objective of using stratification? The answer actually is in letter A. Its primary purpose is to decrease the effect of variance in the population. So if you can just imagine a population with such high variance or exhibiting high variability, where there are very small balances and then very large balances, so that would normally require a very large sample size in order to attempt to capture the variance in this population. So one thing that the auditor can do is to stratify the population. Once the variance is reduced, then the sample size may also be reduced as well. So the answer to this is letter A. Next question. If management fails to provide adequate justification for a change from one generally accepted accounting principle to another, meaning to say this is from one gap to another gap. However, management has failed to provide adequate justification for the change. So the auditor is not satisfied with management's reason from changing from one standard to another, from one principle to another. So what should the auditor do? Letter A, disclose the matter in a separate emphasis of matter paragraph, but then no need to modify the audit opinion. Letter B, neither modify the opinion nor disclose the matter because anyway, both principles are generally accepted. So it would be like, yeah, we'll just keep quiet about it. There's no need to talk about it. Anyway, both are accepted. Or letter C, would you disclaim an opinion because of uncertainty? Or letter D, add a basis for modification paragraph and express either qualified or adverse opinion for lack of conformity with the applicable financial reporting framework. And the answer to this one is actually delta, because we do know that we are expecting our clients to consistently apply the accounting principles. So once the client changes, we are not saying that the client cannot change, but these changes must be appropriately justified in order for us to know if there's really a valid reason for the change from one gap to another. Even if both are acceptable, the client must still justify the reason for the change, and the auditor must be satisfied as to that reason. So the answer to this one is delta. Moving on to the next question. Chris CPA was engaged to audit the financial statements of Tin Company after its fiscal year has ended. Now, the timing of Chris's appointment as an auditor and the start of fieldwork made confirmation of accounts receivable by direct communication with the debtors ineffective. However, Chris applied other audit procedures and was satisfied as to the reasonableness of the account balances. So you would notice this often in the performance of audit procedures, that sometimes the auditor encounters a limitation and then the auditor tries to find if an alternative procedure might fix the said limitation, and that is precisely what Chris was able to do. Therefore, Chris's auditor's report would most likely contain letter A, a qualified opinion because of a departure from PSAs. But then, actually, if you evaluate this case, there is no departure from the PSA. Letter B, unqualified opinion with emphasis of matter paragraph. But then, an EOM is used to highlight something found in the notes. And this one is most definitely not going to be found in the notes. Letter C, qualified opinion because of inability to obtain sufficient and appropriate evidence, thereby invoking scope limitation. But actually, there's no limitation because Chris was able to perform alternative procedures. And so in this case, the auditor will issue an unqualified opinion. Next, internal control can provide only reasonable assurance of achieving the entity's control objectives. So we know that it's only reasonable assurance because there are also inherent limitations to internal control. One factor limiting the likelihood of achieving those objectives is that, or another way of asking is, which of the following is one of the inherent limitations of internal control? Letter A, the auditor's primary responsibility is the detection of fraud that is not related related to the inherent limitation of internal control. Letter B, the board of directors is active and independent. Again, that is not an inherent limitation. In fact, if this is the case, that could actually strengthen internal controls. Management monitors internal control, not necessarily a limitation. The limitation will be when management overrides the control. But if management simply monitors the control, they're just doing their job. That's part of their responsibility to evaluate internal controls. And so, therefore, one limitation is that the cost of internal controls should not exceed its benefits. So, it's part of the cost benefit consideration. So, the answer is delta. Next, which of the following material events occurring subsequent to the balance sheet date would require an adjustment to the financial statements before they are issued? So in this number, we are being asked for a type 1 subsequent event. And remember, for a type 1 subsequent event, the condition that gave rise to the event must already exist on or before balance sheet date. So here are our choices. Letter A, settlement of litigation in excess of the recorded liability. Letter B, sale of a long-term debt or capital stock. Letter C, major purchase of a business which is expected to double sales volume. Or letter D, loss of a plant as a result of a flood. So if we take a look at all of the choices, we should be able to spot letter A as the answer to this. Why? Because if you notice, it says in excess of the recorded liability, meaning to say the liability has been recorded on balance sheet date. That simply means that this situation, this condition was already present as of balance sheet date. And subsequently, it was settled. So even if the settlement happened subsequently, but the condition existed as of balance sheet date and should therefore require an adjustment to the financial statements before they are issued. So that's why the answer to that is alpha. Next question. Which of the following is least likely an objective of an assurance engagement? So we go back to the very fundamentals of assurance engagement, which is least likely an objective. Letter A, an assurance engagement is intended for a professional accountant to express a conclusion that provides the intended users with a level of assurance about the subject matter. Or letter B, take note that we're looking for the least likely. Letter B, the engagement is intended to prevent the issuance of materially misleading information. Letter C, the engagement is intended to provide a level of assurance to be issued by a professional accountant about the information of being in conformity in all material respects with a suitable criteria. Or letter D, the engagement is intended to enhance the credibility of information about a subject matter. So actually, the least likely to be an objective is letter C, intended to prevent the issuance of materially misleading information. We do acknowledge that in the case of assurance engagements, where we can only provide reasonable assurance, at the end of the day, the practitioner lends credibility, improves the reliability of the information. It does not necessarily prevent the issuance of materially misleading information. It just lessens the information risk. So that's why the answer to this, the least likely to be an objective, is bravo. And that's it. You have completed another 25 questions. Bravo, you. Congratulations. If you have been religiously following this playlist, then that must mean that you have officially ticked off your 75th question. So, congratulations. And if you're ready for part 4, I'll see you there.